Good morning, good afternoon, good evening, depending where you are on the planet, and welcome to the Thursday, the 2nd of June, Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. Apologies for slightly late running here. And it's going to be a shortened webinar, by the way. It's UK holiday in here. It's the Jubilee. Hurrah! Pageantry and all that nonsense. So, I'm going to make this fairly brief in here as it's a holiday for me. Getting the webinar out to you guys. Let's have a kick off a lot of the fundamentals in here. There's not much in here actually. They're kind of half missing the main point in here. But Biden apparently going to visit Saudi Arabia later this month. It's OPEC meeting today, and we're going to focus on that a little bit more shortly. Jamie Dimon, JP Morgan, warning of a economic hurricane down the road. I mean, none of this is going to impact markets. More than 2/3 of Americans earning at least $250,000 annually, so they are living paycheck to paycheck. Stocks climb in Europe this morning, US futures up and higher as well. And then today we get the US ADP employment report, so not much in there. Let's look in here. The main thing on here on the agenda is the OPEC meeting. As far as I can tell, I'm pretty sure the OPEC meeting is still ongoing. I haven't seen any headlines. Again, it's a UK holiday in here. I'm not fully immersed in markets so far this morning. From what I've seen, oil is lower on rumours of, and we had these rumours anyway yesterday, talk of an increase in output from Saudi Arabia to make up effectively the shortfall that we're getting from the Russian oil not hitting the market from Saudi Arabia and the UAE. So that's going to be important even when we get there. Now, usually they usually have the meetings, as far as I'm aware, the meetings are in Europe. There were teleconferences. I think they're teleconferences / European based. Usually the European afternoon, and now we're just into the European afternoon now. So anytime in the next 1 to 2 hours, potential for a statement there. I'm pretty sure we haven't had anything out yet. So where are we? So stocks rises, oil declines. So oil lower, crude down, and reports Saudi to pump more if Russia output cut. And then the US economic data Wednesday, fuel concerns over Fed hikes. That's a look back to yesterday with that ISM data in here. And if we just go back to the calendar in here and go back to yesterday's data in here, we can see the ISM data. So the PMI data actually slightly beat expectations, but the other ISM data that we had in here, some of it, the main piece of data actually beat expectations, but some of it missing expectations in here. So kind of a mixed bag there. And then the other data we had from the market was actually just missed expectations. So slightly lower than expectations, but the market did rebound going into the close. So it wasn't a hugely negative session yesterday, and we'll take a look a bit more at that. But pretty much this morning is all about stocks rises, oil declines, inflation fears. And then again, look, European shares rise with focus on oil outlook for inflation. And then, and then look, again in here, look, Saudi OPEC may make up for Russian oil output losses. Biden visit looms. So Biden off, as we said, potentially to Saudi Arabia. What else do we have in here? Oil prices fall and prospect of OPEC offsetting the Russian output losses. I've already covered all of this really in here. And then shares steady as oil drops on output. Talk of output boosts again. We haven't had that. I'm pretty sure. I'm just going to quickly go to this is the Twitter feed that I tend to use, which is part of the Squawk service that you guys get. So live Squawk Twitter in here. So I'm just going to bring that up just to see if there's anything on Live School just very recently that maybe I potentially could have missed in here from OPEC so far. But as far as I'm aware, we don't. So US secretaries climb on lower oil prices. Yeah, we know that already in here. Yeah, retweets, Yeah, nothing in here as yet, as far as I'm aware. So I don't think we've had anything in here. That's from the last 3 hours in here from Live School. So yeah, I mean, there's been nothing out as solid yet. These are all at the moment just rumors of. Okay, so keep that in mind. So that is, and clearly we went through this yesterday. We looked at like the very over the last few sessions, the much higher correlation between oil and stocks. So oil up, stocks down, oil down, stocks up. And if we go and take a look, so I've kind of covered what I want, just have a quick look where the markets are. So we take a look at European markets in here. European markets slightly higher on the most part in here. The CAC, the French index, nearly 1%, and the DAX, the German index, 0.75%. See, the FTSE's down in here, the UK index. They're part of that. Actually, no, sorry, that's not down. FTSE's closed today, of course it is. But the FTSE would potentially, sorry, FTSE's closed. So that was yesterday's number, down about 1% yesterday. But FTSE and oil did remember to call back lower, and part of the FTSE did underperform yesterday. Was worse than the European counterparts. FTSE's got a higher proportion of oil companies. A significant amount of energy producers in its makeup, so it can be more sensitive to oil, but ignore that in there because we're actually closed on the FTSE today. So oil down would actually be kind of negative to FTSE. If we take a look at what the US has done in here, well, we know it was down lower overnight, but if we look at it this morning, bouncing back up between 0.4 and 0.6% between the Dow, S&P, and the Nasdaq this morning. So a little bit of a whistle-stop tour in here today, guys. I am a little bit limiting the time. So there's the oil sell-off. And we looked at this yesterday, remember? I remember we looked at that candlestick there from where it's Tuesday as being a potential blow off top. I remember particularly as it went through this, and that's a multi-decade high in here, remember, on oil. Okay, that high there. Now it's obviously on this contract. Okay, it's not the actual highest point we went to. On the other contracts, we did go to an actual higher price. But we just failed at 120. It's a really negative candlestick. It's a kind of dark cloud cover. It's also an outside, a bearish outside pattern, and a failure yesterday. So the market was an inside pattern. That's a consolidation session yesterday. But you can see rallied and failed yesterday, and then this morning, boom, lower in here. And if we step in on oil, we highlighted how negative that potentially looked in here yesterday. In here, that's gold, so that's not going to be the right chart. Didn't look right. And here we go. And we flagged, the two lows here and here, and you see the acceleration through those lows. Boom, boom. And then also took out this low. This looks like a top pattern, yeah? Not classic head and shoulders. You could argue shoulder, big head, shoulder, right? So the neckline being drawn across like there. That's a tentative head and shoulders top in here. There, and you can see that also is the acceleration point there as well, as in it accelerated through these two lows, but it accelerated as it broke the neckline. So yeah, it probably was respecting that neckline, and then rebound and failed this morning, all pointing south. Now if we get a reinforcement from OPEC Plus today that they are going to increase output, obviously oil price goes probably still lower. I mean, remember a lot of the oil that is priced in though. So if they only do a marginal output increase, or they don't, this is all the way back up here. So you got to be watching. If you stock traders should also be watching this, because it is definitely the body that's wagging the tail at the moment. So this is the dog that's wagging the tail of the other markets. So I'd definitely have an eye on this. Stick some alerts on here. If it breaks through the low here, if it breaks above this overnight high here, then you're going to be wanting to take a look at what you're doing on the stock side, because it's definitely impacting through. Whilst I'm on this tab, I'm going to take a look at gold. Gold in here, this is the daily chart. So we've had gold tracking lower more recently, rebounded yesterday, back a little bit higher in here today. I mean, I've got no massive strong view in here. If we go into the 15-minute chart, hold a gun to my head, I'm bullish really, because of the price action here over the last day or two. But the market's sitting right below that high. Above that high is probably your trigger to go into long. I'm not completely happy about being long, but I think that's the way I've been writing from the long side in here. We were damaged by this sell-off, but we have a really strong turnaround yesterday. So my underlying bias, I think this strong recovery in here is higher, and that fits with my view of a weaker dollar in here. And then the dollar, even though it's rebounded the last few days, back lower and down today. So lower dollar, remember higher gold. And so, I'm looking for, going back to the oil chart, going back to the gold, looking for follow through on the upside. So not, I'm passionate about this one, but, I think up through that peak there, where did I say that was? High 1859.7. So you sit 1860.2 actually there was the actual high, 1860. So through 1860, gold looks more bullish. So looking for that for the trigger on the upside. Quick nod to the equity indices. I say apologies for a whistle stop tour, but say holiday year, and I've got and it's not a huge amount to say, to be honest. We haven't had significantly major developments in here. Significant, not particularly significant sell-off in here yesterday. Market did sell off and then rebounded in here. This underlying bullish theme, I think, still intact. The market dipping and rebounding in here this morning. This is the S&P, by the way. And then going to the chart in here. So remember we looked at this we looked at the market defending this. There's the bigger trend line. Put that back on. Remember, we looked at the market defending this uptrend line, this longer term trend line that comes all the way up. Remember, we looked at this, and remember, we looked at also the old neckline. Funnily enough, it was holding that old neckline and now using it as resistance. I'm going to take this old neckline off because I think it's kind of a bit redundant there. This neckline to the inverse head and shoulders. So the market down through this support line, which we already looked at, but more importantly, holding multiple occasions now at this line here. It's drawn off these two lows that make up part of the inverse head and shoulders, and then you got the low. So I can let you know if you want to replicate this on your charts, guys. This is the low from like the 20th and the low from the 24th, and then you see we hold here, and then we hold again here. So then was this a couple of days ago? Oh, yesterday here. This was yesterday. 1, 2, 3 times it's held that trend line. It's a really solid trend line. And, you know, if we get above this little overnight high in here, so the overnight high, 41.20, 41.27 3/4, this looks particularly bullish again in here, I think. So, yeah, looking for that for the trigger for the next upside move. And then potentially all the way back up here, particularly if oil's low. And if oil goes higher again, obviously, then this is going south. Okay, so watching out for oil, guys. I think it's going to be key today. Quick look at the NASDAQ, similar kind of thing. More resilient than NASDAQ. Really didn't have a significant down day yesterday, just about undercut. So on Wednesday, just about undercut Tuesday's low, and then rebounding again in here this morning. And if we go to the 15-minute on the NASDAQ, it's looking stronger to me in here, the NASDAQ. So we've had, you know, I'm going to take off all this. I'll take off all these. But you've got this kind of, I should imagine we've got a similar line coming up off the low, but we'll certainly take this more recent trend line in here. Look, that works really well. We get the third touch here and is some way away from that trend line. Again, overnight high there, up at 12,664.5. Up through there signals a more bullish theme in here. So looking for a break above there to take us into here. Again, watching oil though. Let's just take a little bit of a bigger picture look on NASDAQ, see if we can get the trend lines off the low in here. So this one in here is not going to do us much good. This one that comes across, say, here. But then, you know, and this one probably through here is not too much good. I'm going to suggest, and this one in here, we've reversed already. So if anything, it's going to be this trend line here. I think this is the same one that we kind of drew. Yeah, it's not really helping us at all. And then the more accelerated one helps us know we're already through that one there. This one here, right? Already through that, so that's no good to us. So yeah, no great trend lines in here for the NASDAQ, apart from this one here, this more internal one that we've got at the moment. So yeah, what's above here? If it breaks down through here, yeah, I'm happy to go short, guys. You know, I'm not, you know, pinned to this long position. So down through, I'm going to say around 12,563, down through 12,560. This looks more bearish for the NASDAQ. Up through that peak there, up through like 12,665, looks more bullish. All right, guys, and as ever, you know, as I said there, keep an eye on oil. It's going to be the most important thing, I think, today with this OPEC result coming out. Just actually going back to the calendar, we do have the ADP number today, by the way. So that's yesterday's. Let's go to today. We do get ADP, which is coming up shortly in the next 30 minutes. Yeah, ADP non-farm employment change. Okay, hasn't moved markets a lot recently, but nevertheless, keep an eye on that. So we've got that in 30 minutes, pretty much bang on 30 minutes time. So watching out for that one there. As we move through the day, what else do we have of interest? Factory orders hasn't really moved market much at all more recently. Crude oil inventories, well, more of a focus on OPEC, but you know, we'll definitely watch that as well, given that oil is very much in focus in here at the moment. So watching out for that crude data. And much later today, we get Mr. speaking. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Stay safe, and I'll be back with you for another bull versus bear webinar pre the US employment report tomorrow, Friday. Take care.